I would suggest that what people should consider is hedging themselves out of that currency, out of that credit crisis, potential credit crisis. And the way you do that is you buy real money with no counterparty risk, which is gold, which is silver to a lesser extent. Silver, I think, is more, it's an industrial metal, really, and I don't actually see it ever coming back as gold, but as central bank money. But having said that, it does tend to move twice as fast as gold. So if gold rises 1%, silver rises nearly 2%, on average.
The price of gold dropped because the US dollar got stronger. However, it didn't fall to its lowest point in 3 weeks because news about slower job growth caused interest rates to drop a bit. This is because gold is seen as a safe haven investment during times of economic uncertainty, and lower interest rates make it more attractive to investors. Alasdair Macleod, former head research at Gold Money Inc., believes that gold and silver are like real money because they're physical substances with value, and they don't rely on promises from other people or institutions. They're not like regular money that might lose value during a financial crisis. The value of the US dollar went slightly higher on Monday because the US had a report about jobs that was a bit unclear on Friday. This made the dollar's value drop to the lowest point it had been at in a week. Macleod highlights that some precious metals, like gold and silver, are undervalued right now. This means that they are priced below their true value. It is possible that some money from the US dollar could move into stocks related to mining precious metals. We will now share clips of Alasdair Macleod from his recent interview, but before getting into the video, make sure to subscribe our channel and give this video a thumbs up.
Demand for commodities is going to continue to hold up at a time when our currencies are coming into difficulties, running into difficulties, and so on and so forth. So particularly if you look at sort of, precious metals mining, they are, I think, very, very cheap on any basis. They are neglected. They do not normally form part of the ordinary portfolio now. It's the ordinary portfolio that is the problem. So what I would see is at least some portfolio money switching into mining stocks as the situation unravels. And the thing that's important about mining stocks is not only is what they extract from the earth, tangible, real stuff compared with the fiat currencies, and therefore they will rise in fiat currency terms. But we can see that there is a huge demand for these, minerals and metals and so on and so forth, as a consequence of what China and Russia are doing with Asia, with BRICS, which has got a meeting coming up in August in Johannesburg. They are 64% of the world's population, looking at the list of attendees. On top of that, they represent over 60% of the world's GDP on a purchasing power parity basis. So, there is a big story there, but it's not with us, it's elsewhere. And it's the way to play it, I think, is with the extractive industries. Mm-hmm. The other thing I would do is, what we're really talking about when we say that we're in a debt trap and, the banks are risky, the central banks, most of them are now in the West anyway, are in negative equity. Look at the Japanese, the Bank of Japan's balance sheet, and you think, oh my God, that's so deeply in negative equity, is just incredible. And also the Eurozone. The Eurozone is virtually all the national central banks have got this problem. And that is going to be a very difficult system to recapitalize because of the various parties involved and the political permissions that are going to be, the legislation that's going to be required to do it across multiple jurisdictions. That I think actually could lead to complete collapse of the euro system. But anyway, I'm going off topic talking about that. So there's a lot of risk in our Western fiat currency credit system, and it goes right from the top central banks the whole way through the banking system. If you look at silver, it's very, very volatile. And I think risk appetite amongst the elderly and those who are desperately trying to keep whatever they've got in terms of wealth together. I think it's risk. Risk is something that you really want to avoid. You can buy, the fact that gold is trading at, say, 1930 or whatever it is today, is not that material. Because you don't have to buy one single large. I mean, you can buy smaller amounts. Mm-hmm. There are smaller coins, and through Shift Gold, somewhere like that, you can buy small coins, small bars, and just tuck them away and pray you don't have to use them.
Yeah. Macleod mentions that a new currency is being proposed to help countries trade without relying on the US dollar. This would be beneficial for countries like Russia, which have been sanctioned by the US and have difficulty trading in dollars. BRICS countries are working to reduce reliance on US dollar for trade. They are developing a new payment system and digital currencies to make trade easier. This is called de-dollarization, and it aims to make BRICS currencies more important in the world. The Chinese government doesn't like that the US dollar is so powerful. They say it's a big reason for problems and unpredictability in the global economy. They're not happy about the U.S. Federal Reserve increasing its interest rates because it led to troubles in the world's money market and made other currencies lose their value. Macleod believes that it's important to have a stable and reliable currency for trading between countries. This would be a currency that doesn't lose its value quickly and is accepted by everyone. This way, countries don't have to worry about using weak currencies that can't buy much. Let's get back to the Macleod's interview.
It really started in earnest when the West introduced sanctions against Russia, because just after that, President Putin appointed a guy called Sergei Glaziev to look at, and this I would think we should regard as a pilot project, incidentally, to look at providing a new currency, settlement currency for settling cross-border trade. This is, whether it's goods, services, whether it's commodities bought in one state, by another state, and all the rest of it. And this was initially designed for what's called the Eurasian Economic Union, which basically is Russia, China, and the ex-Soviet states to the south of Russia, but to the north of China. So there are about, I think there's something like 5 or 6 of these states. And initially, and it was quite a political thing in the sense that Glaziev had to effectively sell the concept to these nations. And it's interesting to watch how his thinking progressed and the way in which he progressed it, because what he said was, this was way back in April last year. He said that he's looking to design this new trade settlement currency, which would be based on a mixture of the existing national currencies and commodities. And it was sort of very vague and airy-fairy. Now, you can understand that as a starting point from the point of view of the politics of the situation. What has happened is that it has evolved from that into, quite simply, a new trade settlement currency in addition to the national currencies, but based solely on gold. Now, this is very, very important. And I think that this pilot project, if you like, for the Eurasian Economic Union is what actually is going to be presented to the BRICS membership in August, later on this month, on August the 22nd to the 24th in Johannesburg. The attendees are said to be up to 41 nations now. Now, this is interesting because obviously what they want, when they're exporters, they want to have a currency which is valuable to them. This idea of doing away with the dollar and instead accepting, say, Indian rupees or something like that, you can't do anything with them, really. And particularly, Russia has the problem that it sold oil to India, and it's been paid in rupees, but he can't do anything with them because of the way the foreign exchange markets work, because what you have to do is you have to sell your rupees to buy dollars and then sell your dollars to buy rubles, so, but the dollar is banned as far as Russia is concerned. So you can see that, a sound currency for this purpose, for this supranational purpose, actually does make an awful lot of sense. But they cannot continue to accept rupees, kwacha, I don't know, all these sort of currencies which buy absolutely nothing, and or Turkish lira, which go down. There's a one-way trip on that one, just down, 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 down. The Argentine, down, 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 down goes the peso. So you can see where this is going. And I think that there is a general understanding that it is important to have a sound currency for the inter-country trade, leaving the domestic central banks with the responsibility and the power over their own domestic currencies.
What do you think about the future of gold and silver as investments? Do you think they are still a good hedge against inflation and economic uncertainty? Or do you think they are becoming less valuable as more countries move away from the US dollar? Let us know in the comments below. That's all from us. If you like this video, please like, share, and subscribe to our channel and click the bell icon to be notified when we release new videos. Currently, 95% of our viewers have not subscribed to our channel. Our goal is to reach 2,000 subscribers. Please consider subscribing to our channel and helping us reach our target.